Good morning, everybody. It's Chris here from Serene Education with the 4 majors in this update for the 30th of January 2014. Okay, guys, let's have a look at the 4 majors this morning, starting with Euro against US dollar on the daily. I just want to bring up to spec. Last night we had the FOMC statement that came out, as well as the US interest rates announcement. Unchanged for the interest rates announcement at 0.25%. However, the FOMC statement that preceded saw the Fed cut its QE plan from 75 billion that we saw, which was reduced in December, to 75 billion. We saw it being cut down to 65 billion, so a $10 billion cut in the QE plan. And subsequently we saw a bit of movement on the market last night, not a hell of a lot, to be honest with you. However, as that's played out for the euro, is you can see that we've seen selling overnight on the euro. You could see that if I just go down to the 4-hour time frame, you'll notice that the indicator box primarily over here is telling you we should be looking for shorting opportunities, and the R squared is complementing that negativity. Long-term sentiment still favors the upside. However, on the 4-hour time frame, you can see that prices fell to make new highs over the past week. And I mentioned here, when we had a nice bullish engulfing breakout, you'll notice straight away that the Osmo indicator wasn't telling us it was true sentiment, so therefore true fake out. We had a tweeze at top, and subsequently since then we've seen nothing but shorting opportunities. Swing low, swing low, swing low, swing low. Institution above price, which is resistance, and price is now looking low again. So if it continues on this merry way, then we could expect price to reattempt the current lows we came from just recently through the best part of the new year, and you're looking in excess of roughly around 96 odd pips. We still have the monthly fib below us, which is the 50% monthly fib retracement level, so that would be ideally also be a long-term target for this particular pair. So if we don't see euro making any new highs, then expect price to start consolidating. Sterling up next, and you can see the exact same thing we've seen recently. Price coming unstuck at the major monthly resistance level high. Got to be well aware of that. On the monthly resistance level, you can quite clearly see here through the 1660 or 16700 mark. If you want to take it to that level, you'll notice that over the years since 2009 we've had a major resistance level, and price is trading into that level as we speak. We're going into the last couple, literally the end of January, and ideally what we want to see is price closing above that level to give us any further confidence for further highs for sterling against the US dollar. A lot here, going down to the weekly time frame, you can see a lot of consolidation over the past month or so, through most of December in fact, as price has been consolidating not only at the 38.2 monthly fib level, but also at this major support and resistance level, this yearly resistance level high here at roughly around 1660. You can take it to 16700 for a round figure, but you'll notice that the indicator bar over here is primarily looking negative intraday, and the R squared is complementing a lot of that selling. However, the long-term sentiment of one of upside and also being complemented. So here it's telling me the long-term sentiment is still very much higher. However, the intraday sentiment is very much negative, because we are seeing consolidation now as we're trading into a major resistance level high. And you can see that last month, in fact, not really going anywhere. So if you're looking to trade sterling long over the Christmas period or the festive season, you would have actually got no return at all, because price has just done nothing. It's just gone sideways, umming and ahhing, a lot of spinning tops. If you've taken all these ranges and put them together and taken all the wicks into consideration, you just have a spinning top. Indecision candle, and that indecision candle is coming at a major support and resistance level high here, both at the 38.2 monthly fib, but also at the resistance level that I've drawn on my monthly time frame, which is that resistance level that's been in place since 2009. So we have to get above that to see any further bullish sentiment, which we're expecting, because sterling's looking positive, has been positive for a long period of time since April of 2013. Failure to get above that level, guys, will then result in price doing exactly what it's done the last month. Done nothing, consolidating, moving nowhere, and subsequently not worth trading. So very, very important that we do get a result sooner or later, either a bearish engulfing candle to tell us this is clearly a major resistance level high, and then we could start targeting price support and resistance level lows, or we get a nice bullish engulfing candle close higher than this major resistance level, and therefore letting us then start to target our monthly fib level high here at 50%, which from the breakout to that level is in excess of 600 odd pips. So want to see a clear direction from the sterling, and until we do get that, it's not worth actually taking the punt. US dollar Swiss franc, Now again, recently we had a nice consolidation through most of December and then January. However, that momentum failing to really pushed price higher as we came into relative contact with the institution moving average on our daily. And notice on this particular pair, we've been trading below the institution moving average since July of 2013. We had a breakout. It was a failed fake out, in fact, because as price rallied, we saw the Osimo indicator here going dark green, which told us there was no true sentiment behind that breakout, and therefore it ended up being a fake out, tweezer top, and price reverted to the downside. So no true trade on that particular time frame, and since then price has been trading below the institution moving average, and in doing so forming swing low, swing low, swing low, swing low. Near term resistance level here after the bounce just recently at the weekly fib level, but also our monthly fib level. Nice strong support level here being forged. It bounced healthily. However, if price is not going to be making new highs or breaking prior swing highs, then there's likely for long-term sentiment to still be one of negative to the downside. See a lot of positiveness intraday as prices consolidated at this weekly and monthly fib level here. However, the long-term sentiment still wants to push price lower. So we should be looking for selling opportunities. Even though we've had positiveness here, we did get in one, the candlesticks overall stayed negative, and when they did go positive, they were still trading well below the institution moving average and indecisive, spinning tops. Can't trade a spinning top because that's an indecision candle. Had to wait for a bullish engulfing candle, and if you wanted a bullish engulfing candle after the indecision candles here, it would need to close above the institution moving average to be one of positiveness. However, that failed to materialize, so therefore price dragged it lower. So we should be looking for selling opportunities on this particular pair. Last pair of the day, US dollar, Japanese yen. Prices also over the past month or so have failed to break above a monthly fib level high here at 61.8. And in doing so, consolidating, and over that period of time, starting to look more negative as price made swing lows. And subsequently, what's happened recently is we've seen a nice bearish engulfing move to the downside. We've had a pullback, and yesterday's news on FOMC statement and has pushed or given us a bearish engulfing candle at a prior underside of support. Candlesticks, however, are still showing positiveness. The institution moving up is still below price. Look at the actual indicator box. There happens to be more blue here just by a short whisker than there is red. However, a lot of indecision has crept into this particular pair, and if we do see a break of the last week's support levels here at 101.96 and change, then we could expect price then to drop quite significantly into our monthly fib level at the 50% retracement level, which is a healthy 200, just over 200 pips away. So more than enough in this to see a value return on time invested. However, we would need to see this current support level being broken. So down to the 4-hour time frame, you'll notice everything is red up but the ADX and the R squared. So it's telling me the selling sentiment on this is looking very, very positive for further shorts. However, you can see that price is consolidated. The candlesticks, however, are still negative. We do have a red arrow, so we have a red arrow, red candle, RMO below, OSMO below, but you'll notice that we've had a pullback and the OSMO is dark red. We want to see a nice breakout of this current support and resistance level, which has been in place since the latter part of this month. In fact, 24th of Jan, we saw support. We had a retest of it yesterday. However, we want to see a break of that in order for us to then target our monthly fib level low. Failure to do so would see further consolidation, and then we could expect price to reattempt the price of one resistance level breakout that we've just come from at 103.129, and then back up towards our institution, and then all the way back up to our price of one resistance level highs at 61.8 on the monthly fib level. So very, very important that we do get a break lower. Put a trigger alert here, and then we could target the downside. Fail to do so, put a trigger alert above this 103.129, and then we could look to potentially start to look for a pullback, of a further pullback towards that 61.8 to the upside. That's it, guys. Short and sweet today. A lot of news out today, guys. We just had the Spanish flash GDP quarter-on-quarter figures out this morning, which showed a forecast growth of 0.2% for the Spanish economy, which is great. Fantastic. If it does anything to the euro, it will remain to be seen, primarily because the FOMC statement, the Fed rate cut last night, will have a more detrimental effect on the actual overall global market, and that includes the euro against US dollar. However, a knee-jerk reaction on that announcement would be more than suitable for this particular pair, and I think if we do go to euro against US dollar on the hourly, we are seeing a consolidation at the institution moving average on the hourly. So got to see a break below that level there to even contemplate looking towards the current low, which is our 135.52 and change mark. Later this we also have the net lending individual month-on-month figures for sterling later this morning, and then this afternoon we have a lot of data. We have the advanced GDP quarter-on-quarter figures for the US market, which is very, very important. They're expecting contraction here. The prior figure 4.1%, the previous figure was 4.1%, apologies, and they're forecasting 3.3, so a contraction there, a significant contraction of 8.8%. And then we have the unemployment claims coming out straight away, and the unemployment claims, unfortunately, I have to say, is higher than the previous figure. So if those two figures come out as expected, that will in turn have a positive figure on any crosses against the US dollar, as the US dollar would be pushed lower. Okay, so very, very important. Then later this evening, anybody trading the New Zealand dollar, we have the trade balance figures, as well as one of the Royal Bank of New Zealand Governor Wheeler speaking. So be well aware of that, guys. Other than that, hope you have a fantastic trading day today. Keep it as simple as possible, and I will see you guys first thing tomorrow morning. Until then, you guys trade serenely.